All right, welcome out to today's advisory report. It is August 24th, 2026. The short-term gauge has flipped back to bearish. This has been a bit of a pattern going from bullish to bearish to bullish to bearish. That gives you an idea of how hard the current market is. We call it a hard penny market. We're starting to play some defense. The condition remains uncertain. Can't get overly bearish though because the intermediate trend is still bullish. So we're just dealing with this chop and the volatility. Looking at some of the target metrics, you can see we're starting to really play some defense here in the ultra aggressive. We'll be ramping up more defense if the market continues to deteriorate. Hopefully we get some support here soon and the market turns back up. This is just what we have to deal with. Things don't go straight up day in and day out. Let's go ahead and look at some of the charts. We'll start out with the intermediate trend. This is a weekly chart of the SP500 versus the 30-week moving average, this orange line. From this angle, all is good. A minor pullback if you're in the long game, so no real big issues here. Let's go ahead and jump on over to the short-term chart. Looking at the S&P 500 on a daily basis, each one of these candles, each one of these bars is called a candle. You can see right here a move up, a move sideways. Up until this point, things looked really constructive, and then we got positive movement up. That felt really good, but then an eventual breakout failure, and you can see movement to the downside, threatening the 20-day moving average, but still sort of hanging in there. Really, this will be a kind of our line in the sand to really play defense right here, but we're looking at the 50-day starting to catch up, so that might add in some additional support. Just holding on to our hats right now, playing it day by day. Let's go ahead and jump on over to Market Lens. And let's check out some of the positions that we have. A position in CrowdStrike, original gathering of this position right around this area right here. You can see it's been up and down, coming back down, having a nice candle on Friday, but then selling once it got above the 50-day. We'll see how long this wants to hang in there. Probably a break below this area might really be the signal to get out of this one, but this could still turn up. It may even be addable. So we're right in that in-between zone on CrowdStrike. Let's take a look at HPE. We had to reduce HPE today. Just too much pullback, too much volatility in some of these names for us to really hold on to and feel good about them. HPE, you can see that pullback. We are still in the positive here, but it's right kind of like in the line area. A break below today's low would probably be an out for us. Let's go ahead and look at a couple other stocks that we had to let loose. MU really had high hopes for this, but the turn back down, this one may not be finished yet. Might be just kind of creating a handle and a cup and handle. It really needs to get back above this area to start really feeling positive about. And then we had to let go of WDC today. As a complete failure of the supporters trying to make. Did find support over here at these lows at the, looks like the 150-day moving average, but just doesn't look good enough to risk. The risk reward on some of these have just really completely turned upside down, and we want high reward, low risk, and that's really not what we're getting right now. That's what I got for you today. Take care. Have a wonderful afternoon. We'll be right back at it tomorrow.